Hey guys, Felice Navi Daddy, Optimus, Tom, whatever. I'm here again. I've been seeing some hopium floating around. That's pretty basic. Hopefully, it's a little louder for you guys. Mic's a little closer. Took the cover off, so hopefully, you guys can hear me a little bit better now. Um, so I've been seeing posts about bonds from AMC specifically, and someone saying that because the price is at a certain number, that they're expecting very bullish things because of the price of said bond. We need to correct that, right? Why companies issue bonds, what corporate bonds are, and all that stuff. So I'm going to do that. Then I'm going to hit a little bit of TA on some of the more popular retail stocks. And then I'm going to show you guys an exercise on how to quickly see if a company is a scam or not. Not if it's physically a scam, but like if it's worth potentially investing in. Obviously, your money, do whatever you want. It's just a quick little 3-point check to go. They might be sustainable, might not be, right? Because unfortunately, a lot of the retail movement, this craze, Wall Street bets, all that's based off of short interest, not necessarily sound investing. So I'm going to show that quick little three market cap versus cash flow, just to see like, hey, this company might be worth some salt, or it's not. I did do that in a space with a buddy of mine, and it was pretty eye opening for some people. So I do want to recreate that for you guys in real time, as we did it that day. We also went over how to check a geared ETF, so you can try to guess what companies they'll be buying into, right? Because all the ETFs, they either do it annually, quarterly, every 6 months or so. They'll change their list based on market cap or whatever their condition is, right? So if it's like, okay, this one's going to rewrite its, because somebody brought up it was a water one, so it was confusing because a lot of weird companies with water, but it was done every 6 months and it's done every May and then November. So like if you start looking at the end of April with the market caps, you'll be able to track it like, okay, which companies are they going to have to buy into, which ones are they going to have to sell. So then from that you can go, oh cool, that one should get bought in, that one's going to leave, that one might get dropped. So you'll know how to maneuver if that's the sector that you want to look into. It's just an easy process of how to, I mean, it takes work, but it's a way of getting that stuff done. Like I said at first, I'm going to minimize my face here. I'm going to hop right into the bond talk, right? So Investopedia, it's what all the other people use. So just as basic groundwork, I'll always start there. Why companies issue bonds, right? They raise money. Obviously, that's why they do it. It's a direct loan, not from a bank, so it kind of helps, you know, doesn't really hit credit score, even though that does come into play later about them having to call them back. That's a whole different beast. But it's, hey, you give us money, we'll eventually pay it out at agreed upon price, and every year that is open for, we'll, pay you a certain per percentage of which I'll explain that later. So the key takeaways: when companies want to raise capital, they issue bonds, right? Bond financing is often less expensive than equity and does not entail giving up any control of the company, which is a good thing, right? They're not issuing shares, so they don't lose power balance like that, and banks get less of a grubby hold. A company can obtain debt financing from a bank in the form of a loan or else issuing bonds to investors. See, helping cut that evil part of it out. Bonds have several advantages over bank loans, can be structured in many ways with different maturities, right? Which is how long it can be open for: 1, 2, 3, 5, 10-year, 20-year, whatever. So bonds versus stocks, this is where I think some of those posts that have been popping up are kind of getting into a little hot water with hopium, right? Because it doesn't water down the earnings per share, which is a good thing, right? I'm going to leave this here so you guys can see this whole little section here. But they're just raising money for the business, right? This is just going bottom line. Now, granted, they will have to pay it back with interest, right? Which is what I'm going to explain next. I'm just leaving that sit there so you guys can read that a little bit. Like, just because the price on that bond was, I think it was $94 and a couple of cents, whatever it was, it doesn't mean that they're betting on it getting to 94 or that it's going to guarantee that it is. That was just if it hits this price or goes this long, blah, blah, blah. This is how the terms were agreed upon. Were there a lot of them? Yes. So AMC's trying to get money, right? There's also that report that came out saying that they want to restructure debt and stuff like that. If you have more cash on hand, it makes that whole process easier, right? So if you guys had some time to read that, if not, you can always just go back or pause me, shut me up. So straight from the SEC website themselves, right? What are corporate bonds? As you can see up here, the URL's there. Or just type in SEC, what are corporate bonds? This thing pops right up. So we scroll down. This is where it talks about like if they go into bankruptcy, if they get called due to credit, stuff like that. Credit default risks, inflation, liquidity issues, they're all coming down here. But this is the part that I think people need to understand. Right, because the maturity on the ones that I saw in that post were 5 years. The coupon rate was 10, which is actually a pretty high rate for what it's worth. Right, so with this little chart, see bond A, bond prices may be quoted in dollars or as a percentage of its face value. Bond A's price is 100% of the face value of $1,000. The bond will pay 4% of the face value or $40 per year. Most bonds are paid semi-annually, so bond A will pay $20 every 6 months. In addition, the bond will make a principal payment of $1,000 at the end of the 10 years. Right? So if it's 10 years and it was 90 some dollars, 5 years, 90 some dollars, you take the 10, that's what, $9.40 times 12. Like, it's not, you know what I mean? Like, it's not a huge deal, which is why they bought so many of them. Like, people saw that price and they were like, yeah, everyone's betting it's going to get. No, that's not how that works. That's not how that's structured. So hopefully in the future, if you guys see people trying to pamp this bond stuff again, you can go, hey, hopium, check this out, right? Come here, read all this goody stuff. Just don't fall for the people or the stuff that just continually says, look at me, this is the next big thing. If they can't prove it, they can't prove it, right? This is basic stuff. So do a little bit of research. Try not to get lost in the sauce, right? Try and get that bread, baby. Now, away from the bonds. AMC, 1 minute candles here on the Trend Spider, right? And transparency, as always, yes, that is something that people do have to pay for. Yes, they did happen to give it to me for free. You guys know I'll never push it on you guys, but if you guys do want to have some fun, that link is down there. So with my craziness that I have pre-programmed in, we're technically we broke all the trends, right? When we started going down. The next heat zone is not until 1588, right? So realistically, we should bounce off of that. That's the crack candle, that famous 1 minute candle, right? With the 5, we're almost in it. So with some volume pumps, we'll pop back up. That'll actually fill this heat zone. Then we should go up and fill this one. And then we go to the daily. Right, we zoom out. That's a long time coming. All right, basically the past year. Fortunately, we're in a pretty nasty downtrend right now. But like I said, we're about to bump off a lot of heat zones. So hopefully that kicks in soon and really helps us out. And then we got to go to the other couple of quick popular ones I've seen popping up. Obviously GME, right? They're still on the trend line. They could break it though. They got to be careful. BBIG still getting some traction here. Right, they're floating right in the center of one on the dailies. I'm not doing crack candles right now. They're right in this little sweet spot. You know, if they can keep up some volume, they should continue to go. Don't know how this wasn't filled, but oh well. Like I said, they have a lot to fill in this area and here, so watch out for that. Pop in fun. It's sitting in this upward channel. Grom, hopefully it breaks through this downtrend, then it can start to fill its way back up. People were talking about Zella today. Beautiful chart there. Obviously, like I said, it's a 5 minute way above heat zone, so it could either fly or crash back down, right? Always got to be careful. And then let's see. Here's my man Rob Chang here. And he's looking solid. It's finally on a good uptrend, right? Looks like a gap filled here. Hopefully it fills in this part because then it's got a good up to 250, right? Should be a good solid run if it keeps going up there. And let's see what I know DWAC gets thrown around a lot because it has potential to pop up any moment. With some volume, it should keep on the trend line, then fill up this gap right here, and we should be good to go, right? So basic ticker talk, basic TA. I do have all my stuff pre-programmed in, so you don't have to watch me draw all the lines and all that boring stuff. But that's how we're sitting, right? We got a gap fill in here. Hopefully it doesn't go that way, but we'll see. Now on to the other one. So MVIS, this came up. Some of these were the examples from the space call specifically. So MVIS was the first one that was brought up. Hold on, let me refresh that. Pulled it up this morning. Current market cap is $494.5 million, right? We look at how much cash on hand they have. They have $16.8 million on hand. But their market cap's $500,000. So $16,862,000 divided by, what was it, 400? I'll just do 495 million. That easy. It's only 34%, or 3.4%, sorry. So they only have 3.4% cash of what they're actually worth. That's atrocious. And cash flows from operating activities, right? So take 16,862 minus 13,634. I'm just doing it this way because it's 3,228,000. So at the end of last year, they had essentially $3.2 million with cash on hand, but their market cap is almost $500 million. That's atrocious in the world of business, right? I'm not saying the company's a scam. They have good tech and all that, but when it comes down to it, you gotta be careful. Activision, pick them because they're in the news and they're a humongous company, right? Especially now with Microsoft coming in. $62.7 billion. Sources of liquidity, cash, $8.6 billion. Worth 6.7 or 62.7 billion. At least they have 8.6 billion in cash on hand, right? Cash flows. They're positive, right? They're positive I'll just round up 2.2 billion. So they're both positive, right? They're not negative on one side, bringing down the actual total. They're making good, strong moves, right? They went up 8% from last year. They're not going backwards or down, right? So this is obviously more of a long-term potential play, not including short interest and the other stuff that retail has been generally looking at recently. Wilhelmina, this pops up sometimes on the charts because of short interest, right? Just like MVIS does. So market cap's 21.71 million. Cash equivalents is 5.5 million. It's a lot closer than the MVIS number, but it's still not ideal. Cash flows operate. This is a problem though. They lose almost 5 million They lose almost all of their cash in operations though, so they're barely positive, right? So short interest isn't always the way, and that's why, unfortunately, I'm going to say a very unpopular opinion. That's why shorting happens, right? Because some of these companies, like, they're not scams; they're real companies, and they have real people that work for them, right? But they might not be very strong fundamentally, and they might be hurting the overall sector, right? Which is kind of why shorting even exists. It's when it's abused that it becomes the problem. For like a long-term investment, doesn't look the best, right? This might be something Jim Cramer would say. That's obviously a joke, but we need to pay attention for stuff like that and to do it in real time. So Smile Direct was brought up that day in that space as well. So Smile Direct market cap, right? Should pop right up on Google. 942.7 million. What's the actual ticker for that? Let's do it this way. The 10K. All right, let's see here. All right, we'll do PDF. So Command F. So you just hit cash. The 144. That's an extreme amount. Sorry for all the clicking. This is clearly not it. Let's see here. This is a crazy one. All right, now we're getting close. No, that's not cash though. Total revenues again. Net cash used in operating procedures. Oof. 83.5 million. Cash on hand at the beginning of the period though. Oh, they were heavy. They were heavy cash in pocket. Okay. But where's cash flow though? That's the problem. Glad to see they actually had strong fundamentals there. So let's do it this way. Interest paid. Nope, don't want that one. Come on, people. Let's go. All right. So they lost 278.5 million, but they were up 300 million and change. So they're still up a pretty good chunk. They still have 50, 60 million, whatever it was, in positive flow, right? Which is much, much better than, don't worry about this, that's my next video, I think. So this one actually is better than MVIS, right? So if you do the math, you have 60 million going to 942 million. That's not great, but it's still better than the MVIS one, but obviously less ideal than Activision. So when it comes to that stuff, right, just research those things, those tactics, right? See what works, see what doesn't work for you specifically. There's other parts of businesses to look into as to why and how they might be smart for long term versus short term. Just as retail, never stop learning, never stop reading, right? And like I always say, let's get that bread, baby.